Welcome back to Power Breakfast. Now, the big domestic macro cue to track. Inflation has slowed to a 15-month low in March in India. So the consumer price index has dropped to 5.66%. This is largely thanks to a sharp drop that we've seen in food prices, as well as, of course, the base effect. As far as industrial output goes, in February, it has grown by 5.6%, which is pretty much in line with what we were expecting. Lata is here with all of the details on this. Lata.
Yes, sir. Inflation is not only in line with market expectation, the big relief is it's way below the 6% threshold, which the MPC is, mandated to keep inflation below. So 5.66, that way is a big relief for RBI and MPC, considering that they have paused. The reasons are not are not a mystery. After all, there was a base effect. March of 2022, prices had gone through the roof, food, edible oils and cereals and wheat because of the Ukraine war. So base effect was anyway going to bring the inflation down. The additional cause of relief for the Reserve Bank and the country is that cereals are down. That was the big fear, that because of the heat wave or the unseasonal rains, whether the cereal prices would go up. The fact that they've gone down month on month is a big relief. For edible oils, were always expected to be lower. That's another factor pulling it down. Perhaps the only fly in the ointment is milk prices. They are up 0.6% month on month, but that was on expected lines. Pulses are also higher. So really there is a protein inflation element for sure. The bigger relief is that core inflation is down to 5.8. RBI has been repeatedly pointing out to the persistent core. So this will again come as a relief. Overall, it kind of vindicates the Reserve Bank's stand that maybe we should pause and look ahead. Now, the expectation is that both in April and May, inflation will fall below the 5% mark also. It will be 4 point something because of a huge base effect. April of 2022 was 7.79% inflation. So we will definitely get a base that will push the inflation closer to the 4% mark. So unlikely the Reserve Bank is going to raise rates in the June meeting. So clearly it looks like the peak of the current cycle has been reached, at least as of now. A word on the IIP number, it's a good number, 5.6%. It is on expected lines, but what is important to note is it is investment heavy. Infrastructure and capital goods are the two elements that have done very well, including power. And the ones that have not done very well are consumer durables and even consumer non-durables. Although it shows a growth, it's a very low base, so we shouldn't be impressed. Consumption is still weak, you will have to admit. That perhaps is the only disturbing element in the macroeconomic numbers.
All right, Lata, thanks a lot for bringing us an update